Thanks, Marina. I really appreciate the opportunity you've given me to deliver this presentation to the CharityVillage audience. You guys do great work to support the nonprofit and charity sector in Canada, and I'm thrilled to be working with you to help charities and nonprofit organizations understand the ideal role for their treasurers. So as Marina mentioned, my name is Gordon Holley, and I'm the President and CEO of Humanity Financial Management. As a CPA, CA for almost 30 years now, I love helping individuals and organizations that are trying to make the world a better place. In fact, we work almost exclusively now with nonprofits and charities. And I've had about 40 years of cumulative board experience, mostly as treasurer, and I'm currently on the board of 3 small to mid-sized organizations. One of the boards that I'm on currently is Vantage Point in Vancouver. I also facilitate most of their financial governance workshops for nonprofits and charities, and I'm also doing some financial governance webinars for organizations like CharityVillage and the Canadian Charity Law Association. So I've had a little bit of experience in the treasurer role and the topic that we're going to be discussing today. Just to give you a little bit of information about our firm, we do work with almost exclusively with nonprofits and charities, and unlike most CPA firms, we focus on helping those organizations build their internal financial capacity. So either acting as outsourced bookkeepers, controllers, and CFOs, helping them create excellent internal financial systems for bookkeeping and accounting, financial transaction management, or budgeting and reporting, or helping them protect the assets and reputations of the organization and their directors. In addition to that, we also help organizations build organizational capacity so they can grow, serve more people, and have more impact. So enough about me. Let's jump into the content. First of all, a quick disclaimer, there may be some legal and tax information in here. Just know that, please, that it's not legal and tax advice. Every organization should get their own independent legal and tax advice if they have any questions or issues, and the views expressed are my own, not necessarily those of CharityVillage. With respect to our agenda today, I'm going to start by trying to provide some context. I want to talk briefly about board financial governance and the required nonprofit financial roles and responsibilities, and then we'll tease out from there specifically the treasurer's key roles and responsibilities. I'll talk about the things treasurers can do to really be awesome and distinguish themselves from sort of the run-of-the-mill treasurers. We'll talk about finding, training, and keeping awesome treasurers. And throughout the presentation, or in a few different places, we'll talk specifically about the challenges and solutions for the smaller organizations. Okay, so we've just got a couple of quick polls to run through before we get started, so I can get an idea of who's on the webinar today. The first one, if you could let us know what your position in your organization is. And there's, I think, 5 choices. Are you the treasurer? Are you a non-treasurer board member, senior management, staff, or a non-board volunteer or other?
Great. And so everyone, you can just go ahead and vote on your screen. Good stuff. Looks like we've got most people. So I'm just going to close and share this so that everyone can have a chance to see who's on the call today. So we've got 30% treasurer, 21% not treasurer but board member, 25% senior management. So pretty good split there, and 18% staff. 7% are identifying as a non-board volunteer or other.
Wonderful. That gives me a good sense. Thank you for that. So let's go on to poll number 2. Get a sense of the size of organizations that are on the call today. There are 5 options, 0 to 50,000, 50,000 to 250,000, 250,000 and 1 to 500,000, between 500,000 and $1 million, and over $1 million.
Great. So once again, if you don't mind just giving a quick vote on your screen. Excellent. Okay, so again, I'm going to close and share. So we've got 16% up to 50,000, 20% in the 50 to 250,000, and another 20% in the 250 to 500. So that's a good chunk right there.
Wow, relatively evenly split.
Pretty split. Yeah, and then 16% 500 to $1 million, and 28% over $1 million.
Wonderful. Okay, well, thank you very much, everybody, for filling out those polls. So let's dig into the content. So first of all, I'm just going to start by setting the stage. Now, when I look at, there's a number of jurisdictions across the country that provide some I'll call them template bylaws. And I did this, I looked at the template bylaws from all of the jurisdictions across Canada that provided them, and I compiled this summary of, for the most part, what all of those template bylaws included. So for the treasurer position, they said the treasurer should either be doing or making the necessary arrangements for the following. So first of all, preparing an annual financial budget. 2, managing the organization's financial transactions, everything from receiving and banking monies collected to paying the organization's employees and vendors. Keeping accounting records in respect of the organization's financial transactions, bookkeeping and accounting, maintaining adequate financial books and records. Preparing the organization's financial statements and reports for both internal and external stakeholders, and making the organization's filings with respect to taxes. So this is a very basic description of, in theory, what the treasurer should be doing according to the template bylaws from the various jurisdictions across the country. Now, certainly all these things need to get done. And I'm going to make the case, though, that generally speaking, we would prefer to see the treasurer not doing these roles, even in the very smallest organizations. In fact, and the challenge is that if the treasurer does these roles, there's really no effective segregation of duties or independent review. And these are really 2 of the strongest internal controls and the most effective internal controls that organizations can have over their finances. So if you're trying to protect the organization from risk, if your treasurer is doing the bookkeeping, then there's a significant amount of financial risk. Because if one person's doing it all, there's no independent review and there's no segregation of duties, you're open to a significant amount of financial risk. So I'm actually going to say that job number 1 for a treasurer, if you're going in, even in the very smallest organization, is to make sure that you're not the person doing those roles. Now, you do need to make sure that those roles all get done. So I'd encourage you to work with your organization, find another volunteer, or pay to have someone do it, either way, to actually do those basic bookkeeping and accounting roles. And then the treasurer should be the person that's reviewing their work for accuracy and completeness. And this is just a broad generalization, that the more people you have working in the finance function, the less risk there is. And that'll come up as a theme throughout the presentation today. But more than that, I want to talk about, even if you are doing those roles in your organization, I want to talk about what really transforms this sort of plain Jane definition of bookkeeper to an awesome bookkeeper that really provides incredible value to the organizations, charitable and nonprofit organizations. And so here's my short list. My short list is an awesome treasurer, in addition to doing the other things or making sure that the other things got done. An awesome treasurer would also advise the board. And ideally, the treasurer is the most financially sophisticated person in the organization because they're charged with, in my view, really trying to create value for the board, because many board members don't have a lot of financial background or expertise. And so advising the board with respect to financial strategy, funding model, how to improve financial health, financial performance and financial sustainability, reducing financial risk, making sure that the organization has appropriate financial systems in place for financial transaction management, for bookkeeping and accounting, for budgeting and reporting, for financial internal controls, developing the financial literacy of board members, helping board members understand the financial reports that they're receiving, making sure that they're receiving the right reports, and helping them develop an understanding of how the board can provide the most effective financial oversight to the organization. We suggest that an awesome treasurer would also bring in additional help if you need it, either by getting a mentor from a similar organization that's kind of in a similar sector, or hiring a part-time controller or a CFO or a bookkeeper or doing whatever you need to do in order to get the help you need, because it can be, and we'll talk about this later in the presentation, it can be a significant role. And then an awesome treasurer would also help find and train their successor, which is often a huge issue for organizations as they make the transition from somebody who has a great deal of financial skill. Often replacements don't have nearly the level of experience and can create a challenge for the organization. So here's my short list of 5 things that an awesome treasurer would do for charities and nonprofits across the country. Now, there are some specific challenges for smaller organizations. Many of them don't have a bookkeeper, and so the immediate assumption is that the treasurer will take over the bookkeeping role. Or the bookkeeper may be the most financially sophisticated person in the organization. The treasurer may not have any significant financial experience or understand how to read financial statements. They kind of get roped into the position without having the relevant financial experience. The board may not know what they don't know. I've seen a board review the financial statements of an organization that was, I think they were about a $750,000 a year organization that had a $500,000 error on the balance sheet, and none of the board could identify that. And then also in many smaller organizations, as we mentioned, there's a lack of independent review and segregation of duties. So these are the challenges that many small organizations face. And toward the end of the presentation, we'll get in. In the meantime, we're going to talk about what it looks like in a larger organization, just to give you a sense of what an ideal world would be. And then we'll talk about how to deal with that for many of the smaller organizations. Okay, so let's talk briefly about board financial governance roles and responsibilities. And first off, I just want to set the stage to say that, generally speaking, of these 3 roles that you'll see on the screen, governance and oversight, management and operations, the board really has one required focus, and that is governance and oversight. So they're responsible for strategy and goal setting, for organizational health and performance, and for asset and reputation protection. So that's really the primary role of the board. And so from a financial perspective, we're really stewards, fiduciaries, trustees, and guardians. We've been placed in a position of trust to manage assets on behalf of the stakeholders of the organization. And as a result, board members are generally supposed to be held to quite a high bar of performance because we are looking after assets for other people. Now, a lot of what we're going to talk about today is around risk management. I think the treasurer has a key role to play in risk management. And so these are, from my perspective, I think the primary financial governance risks for most organizations. And you'll see the first one there is occupational employee fraud, theft, and embezzlement. We'd all love to believe that this never happens in the charity and nonprofit sector across the country. Unfortunately, it's much more prevalent than you think. And I think one of the primary roles of the treasurer is to help reduce risk of that specific financial risk. Obviously, running out of cash is a problem, so maintaining cash flow projections so that you can identify running out of cash or potentially running out of cash far in advance so you have time to do something about it is an ideal, certainly best practice. As we all know, charities and nonprofit organizations aren't subject to income tax, but they're still subject to the same rules for payroll and sales taxes. And often organizations end up hiring a bunch of independent contractors when they really should be hiring people as employees. And as a result, if they get audited for payroll, often the CRA comes back and hands them a huge bill saying you should have been deducting income taxes, CPP, and EI for your employees for the last X number of years, and here's what you owe us along with interest and penalties. And that can be a significant impact financially to the organization, and that most organizations can't afford. And I've seen organizations close their boards because of payroll or sales tax reassessments. Losing charitable or NPO status. If you lose your charitable status, there's essentially, if you don't get reinstated within a year, there's a 100% tax of all of the assets of the organization. So if you own land and buildings, if you have bank accounts, accounts receivable, computers, everything that you own, you're either required to give to another charity or pass it on to the CRA. And obviously there can be ramifications to losing nonprofit status as well. And then obviously there's reputational risks. I've seen a number of organizations that end up in the front page of the paper because the board members are using the assets of the organization inappropriately or ineffectively. And then finally, I've seen organizations that make significant reporting errors, as I mentioned previously. So I'm just going to briefly talk about occupational theft and employee theft, just because I think this is such an important financial risk, specifically for the charity sector. There was a study done in 2011 by CGA Canada, and they looked at occupational fraud in small to medium-sized enterprises, which included nonprofit organizations and charities, but wasn't specific to nonprofit organizations and charities. And they concluded, based on this survey, that about 26% of the surveyed small and medium-sized enterprises across Canada had been impacted by at least one significant instance of employee theft and embezzlement within the last 12 months. In BC, the number was 37%. And we expect the experience rates to be significantly higher in the nonprofit sector because generally there's an atmosphere of trust. There's difficulty verifying certain revenue streams, specifically cash, generally weaker internal controls. You don't have the business owner watching the bank account every day. And there's often a lack of business or financial expertise in many small organizations and a significant reliance on volunteer boards. According to the Association of Fraud Examiners, and this is consistent with I think the 2018 Global Fraud Survey, that median losses in nonprofits tend to be around $100,000, and that's globally. There's another study, this one in Canada, that suggested that 5 to 7% of gross annual revenue in nonprofits is lost to employee theft, fraud, and embezzlement. In Canada, in 2016, the most recent year for which numbers are available, we have about $261 billion in revenue. So our annual loss is estimated to be about $13 billion to $18 billion. Now, but I want to provide the same suggestion here that these numbers, the numbers they actually used here were an estimate of the revenue loss to general for-profit organizations across the country. And again, we think the numbers are significantly higher in the charity sector. So just a couple of quick examples of when they make the news. Here's an article published by the New York Times on the trusted grown-ups that steal million from youth sports. Here's another one by NBC News talking about insider theft, a big problem at small charities. And you can see there's a significant number of instances where they had 54,000 go missing, 34,000, 60,000, 33,000, 78,000. And then a bookkeeper for the Hockey Association pleaded guilty to taking more than 934,000 from an organization that was hoping to build another ice facility. Here's another article in the Boston Globe, employee theft shockingly common at nonprofits. And here's some recent examples from Canadian press. I think this one was sometime in the last couple of weeks. An island woman on PEI defrauded an autism charity of $26,000. An assistant that stole from an Okanagan hospice is now working in finance for another charity. I think he or she took about $69,000 in that case. Another article, this one happens to be from the Central Okanagan again. $20,000 for a high school PAC, $330,000 for another hockey association, $40,000 for a downtown Penticton association. And then finally, women charged with defrauding a Calgary Charity of over $700,000. So this isn't unusual. I've got a Google alert set up, and I probably get 3 or 4 of these a week, primarily from organizations across Canada that are hit with fraud. And many of the ones that are don't get published in the paper. That's relatively unusual. Obviously, organizations try and keep this quiet to protect their reputations. So there really is a significant, particularly reputation risk to organizations if they're not managing stewarding the assets of the organization and protecting them against employee theft, fraud, or embezzlement. You can end up with difficulty attracting funders and donors, board members and staff have difficulty achieving your mission, and potentially bankruptcy. Same directors also have some personal risk. If you're on the board of one of these organizations, there's some personal liability. You've got personal reputation risk. We saw here with a large organization in Vancouver a number of years ago, where the entire board of directors was required to resign because of things that went on in the organization. The directors had to personally resign, and that had a significant impact on their individual reputations. Directors are also potentially personally liable for up to 6 months of payroll in BC, payroll remittances to the CRA, and any GST or HST that was collected but not remitted. So those are the types of risks that even very small organizations face. So if you're the treasurer, this is an opportunity to help out. So let's talk about the ideal roles and responsibilities, the ideal financial roles and responsibilities in a large organization to give you a sense of what's typical in organizations that are working well. So first, in a large organization, you're typically going to have a bookkeeper, a controller, and we'll get to the general roles and responsibilities of what these folks do in a minute. You're going to have a bookkeeper, a controller, a chief financial officer, an executive director or CEO, a treasurer, and board members. You're also potentially going to have a finance committee or an audit committee. You're going to have program managers and other staff or contractors. And all of these people will have some financial roles and responsibilities. And the beauty of this is it leads to both a significant segregation of duties, so we can have different people performing different roles of any financial cycle, and this makes it much more difficult to conceal theft and much more difficult to, or much easier to find unintentional errors. And it also provides multi-level reviews because generally the controller is going to be reviewing the work of the bookkeeper, the CFO is going to be reviewing the work of the controller, the CEO is going to be reviewing the work of the CFO, the treasurer is going to be reviewing the work of the CEO, and the board is going to be reviewing the work of the treasurer. So there's multi-level reviews, significant segregation of duties. That's what it can often look like in a larger organization. So just to talk about what some of the specific roles and responsibilities are, as a bookkeeper, and there's a metaphor in the second column here, it's kind of a construction industry metaphor. So we say the bookkeepers, like a skilled trade, they tend to do bookkeeping, payroll, sales taxes, basic financial reporting, and maintain source documents to support an audit or maintain adequate books and records for the CRA. A controller is kind of like the general contractor. He ensures the accuracy and completeness, he or she ensures the accuracy and completeness of all financial reporting and budgeting, and ensures regulatory compliance with the CRA and other organizations. The chief financial officer is like the architect. They improve organizational financial health, performance, and sustainability and cash flow. They design financial reporting systems to deliver meaningful, useful insights for better decision making. And they manage financial risk and protect assets of the organization. The treasurer is kind of like the building inspector, making sure that everybody else is doing their jobs and have the appropriate skills to do their jobs. So they interpret the financial reporting from management and advise the board of directors. They ensure the board of directors meets all of their financial fiduciary responsibilities. They develop board financial literacy and facilitate strategic thinking about financial vitality for the board and the organization. And then finally, the board is like the municipal council. They ensure mission achievement, they ensure financial sustainability, they're stewards, and they protect the assets and reputation of the organization. They support the CEO or executive director, and they act as ambassadors of the organization. So in a large organization, you'd have all of these positions with the various financial roles and responsibilities. Now, what I firmly believe is that regardless of the size of the organization, all of these roles still need to be performed. Whether you've got a large organization or a small organization, even if it's just the board, it's a working board, you've got no employees, all of these financial roles still have to be performed. Somebody has to do them. And so what the point I'm going to make later is that the more people we have working on the financial side of an organization, the better. Okay, let's talk about the board and director financial roles and responsibilities. So generally speaking, boards have two primary financial roles. The first is around resource acquisition, making sure that the organization has the most appropriate revenue and funding model, that the organization has the resources it requires to achieve its mission, and that there are appropriately skilled people and appropriately designed systems to maximize the efficiency and effectiveness of the fundraising or fund development activities. The second primary financial role is around financial stewardship. And this is really ensuring that the budget is aligned with strategy and mission, that the financial risks to the organization and to the directors are identified and managed, that there are appropriately skilled people and appropriately designed systems to steward the assets of the organization and protect them, to ensure that the board has the financial governance skills and understanding to fulfill its appropriate roles, to ensure that the board is receiving all of the financial information in appropriate formats that allow them to make appropriate financial decisions that they need, and to ensure that the organization's in compliance with its regulatory environment. And note that accountability for these responsibilities really can't be delegated without the assumption of sometimes significant organizational and personal risk. So these are really the financial roles of the board. And often what we see in organizations is that the board says, oh, well, we've got a finance committee or audit committee. I don't need to know any financial stuff. I'll just let them do the work and I'll take their word for it. Well, first of all, that puts an awful lot of responsibility on the finance and audit committee. But more to the point, if the organization's ever sued or involved in a lawsuit, each individual director is actually personally responsible. You can't just offload all of the financial responsibility onto the treasurer or onto the finance and audit committee. You can certainly look for their recommendations and get their take on what's happening, and they can help you identify priorities. But each individual director really has to stand on his or her own and take responsibility for the financial governance of the organization. So here are the roles we propose for individual directors. And the first one is that they really need to read and understand understand the relevance of all of the financial statements and financial reports that they receive. So as an individual director, we suggest that people satisfy themselves that the strategic plan is the most effective way to achieve the mission, that the budget is the most effective way to spend available funds, and that the organization has enough resources to achieve its mission, is financially healthy and on budget, effectively managing its financial risks, has enough insurance and financial reserves to protect itself, and is on side with the Canada Revenue Agency and other regulators. Again, individual board members can't abdicate or delegate these roles without taking on potentially significant personal risk. At the end of the day, the board's responsible, and that means individual directors are responsible. Okay, so let's talk specifically about treasurer roles and responsibilities. Now, there are financial requirements for organizations that are often come from a variety of places. First of all, there are financial requirements in the various pieces of incorporation legislation or societies acts from across the country, whether you were incorporated federally under the Canada Nonprofit Business Corporations Act or under one of the Provincial Societies Acts. There are some financial requirements and boundaries in there. Often in the Constitution and bylaws, there might be a job description for the treasurer within the Constitution and bylaws. There may be some audit requirements, and there may be some financial requirements and boundaries, restrictions on taking on loans, for example, or going into debt. So these are things that all treasurers should be looking for. There may be a treasurer position description somewhere that was prepared by the organization. There may be financial policies or a financial governance manual. And then finally, there may be audit and finance committee terms of reference. And I think if you're taking on a new role as a treasurer, you need to go and check out all of these things, at least ask the questions. Are there financial requirements in the Societies Act that we were incorporated under? Go get a copy of that, review your Constitution and bylaws to see what other rules and regulations there are. Get a treasurer position description, check out the financial policies and manual, and make sure that all of those things work together. We worked with an organization recently that had 3 different treasurer job descriptions. There was one in its financial manual, there was one in its Constitution and bylaws, and they also had a treasurer position description, and all 3, surprisingly, were significantly different. So I imagine the treasurer in that organization found it difficult to understand really what their role was. Okay, so as we mentioned, in many organizations, common treasurer roles are compliance-based. So preparing the annual financial budget, managing the organization's financial transactions, keeping accounting records, preparing the financial statements, and meeting the organization's filings with respect to taxes. Again, we suggest that generally treasurers should try and find somebody else to fulfill this role. It can be another volunteer bookkeeper, or it could be a paid bookkeeper, or it could be a co-treasurer. If the treasurer is doing those roles, they're not able to provide any risk management around segregation of duties and or independent reviews. So we suggest that we'd prefer to see a treasurer advising the board, reducing financial risk, developing financial literacy of board members, bringing in additional help if they need it. If they're starting to feel stressed or anxious around that they may not feel comfortable with their background and experience, that it enables them to fulfill their role as treasurer, get some help, find a mentor, talk to one of the accountants that you know, get their advice, and then to help and find and train a successor. So here are some typical roles, and these are roles that we talked about at the beginning for different positions in the organization. And we'll see these in larger organizations where they'll have full-time bookkeepers, full-time controllers, full-time chief financial officers, and full-time CEOs. And these are all ideally staff roles, not treasurer roles. Even in smaller organizations, although in smaller organizations, there may not be any way around it, and the treasurer may have to take on somebody's roles. But the more roles the treasurer takes on, the less segregation of duties there is, and the fewer levels of independent review there are, and the more financial risk the organization takes on, the more the treasurer is likely to be a short-term position, because treasurers will get overwhelmed and may not stick around for as long as they otherwise might. So just to review these briefly, the bookkeeper generally records daily financial transactions, prepares payroll, makes payroll remittances, tracks sales tax and files sales tax returns, and maintains adequate books and financial records. And then does some self-review, prepares account reconciliations for customers, vendors, payroll, sales tax, all the CRA accounts, etc. So they do their own sort of self-review. The controller, and in an ideal world, the controller would be a CPA, generally ensures the accuracy and completeness of all financial reporting and budgeting. So the controller is the person that's generally reviewing the work of the bookkeeper, making sure that all the reports are accurate and complete, reviewing all the filings for the CRA, drafting the budgets and cash flow projections, and making sure that the financial reports are accurate, and ensuring regulatory compliance. The chief financial officer generally tries to improve the organizational financial health, performance, and sustainability, so really thinking strategically about the finances of the organization, designing the financial and budgeting and reporting systems to make sure they're meeting the needs of the organization. The CFO would also generally be responsible for risk identification, risk management, and asset protection, and reviewing the work of the controller and supporting the controller, and making sure that any reports going to the board or externally are all accurate and complete. And then the CEO is generally responsible for the overall financial results of the organization, achieving the financial goals and targets approved by the board, and is generally responsible for fundraising in partnership with the board. And they would also review the financial reports and ask questions. So you'll see the boxes highlighted in sort of light green down at the bottom. Those are the review roles of those positions, the independent review roles. The more sets of eyes on something, the less likelihood there's going to be opportunities for occupational theft and fraud, and opportunities for unintentional errors. So if you can, if you're a treasurer in a small organization, try and enlist as many more people as you can into these other roles. Again, they might be volunteer, but certainly the primary internal control systems are certainly the actual compared to budget reporting, or the budget compared to actual reporting that most organizations do. And just a point here, be wary that many thieves try and bury amounts in balance sheet accounts, particularly accounts like deferred revenue or GST payable, that many people don't really understand what goes in there, so they're hard to review. So even if you're getting a budget compared to actual report, it may not even include any of the amounts that people are taking from the organization. And then the other primary internal control systems, again, have to do with multiple people in review. So having segregation of duties between different positions and multiple independent reviews by more qualified people. Specifically with respect to segregation of duties, just to give you a concept here, when we say segregation of duties, what we suggest is that no one person should perform all of the functions within an accounting cycle. And the functions are custody, record keeping, authorization, and reconciliation. And no one person should also have the ability to cover up an intentional or unintentional accounting error. So this is why we like to see multiple positions in the finance department. We don't like to see the treasurer doing all the bookkeeping and also responsible for, all of these other things, because it really leaves the organization open to risk. So in an ideal world, even in the smallest of organizations, if you're going to have a treasurer, if you at least have a bookkeeper who prepares the information, at least the treasurer can review the information. So you've got somebody hopefully with a higher level of skills reviewing the work of the bookkeeper so they can identify any issues and challenges. Okay, so with that by way of background, I mentioned that there's 5 sort of strategic roles that we would look for in an awesome treasurer. And the first one is advisor. And so now we're going to get down into some of the details specifically for the treasurers and board members on the call who want to get to more detailed sense of what their ideal treasurer should be trying to do. So first of all, this should be an awesome treasurer would have a role for advising the board. And this is really thinking strategically about the financial funding model and funding activities of the organization. Do we have the right funding model? And by funding model, I mean, where do we get our money from and how do we get it? Are we getting our money primarily from governments, government grants and contracts? Are we getting our money primarily from members or from individual donations? There's a number of different funding models. If you do a Google search on the internet, there's I think, well, there's a few of them that come up. So if you look for funding models for charities, there's some great articles on picking the appropriate funding model for your organization. Also thinking about the financial health, performance, and sustainability of the organization. So are we tracking the right metrics? Is our balance sheet strong? Are we, does our organization have financial vitality? Are we performing well financially as an organization? And are we likely to be financially sustainable into the future? These are all questions that somebody needs to think about, and ideally should be led by the most financially sophisticated person in the organization, which we hope would generally be the treasurer. Also advising the board with respect to making sure the board meets all of its fiduciary duties and responsibilities, so compliance with the regulatory requirement, and we'll talk more in a minute about financial risk identification and management. We mentioned specifically with respect to compliance with the regulatory environment, there's rules and regulations, financial rules and regulations in the Incorporation Legislation for most jurisdictions. The Canada Revenue Agency certainly has a significant component of regulation around payroll, sales taxes, and the operation of charities and not-for-profits. We'll get into the details of that in just a minute. Employment standards have rules and regulations around paying everything from employees, volunteers, workers' compensation, and other. So there's a number of pieces in the regulatory environment that treasurers have to be aware of and help make their boards aware of. Specifically with respect to incorporation legislation, anytime you make payments to directors that may or may not be allowed under your incorporation legislation, in various roles, whether it's in their capacity as director, whether it's in their capacity of providing additional services, or I think most of the jurisdictions, I think all of the jurisdictions allow expense reimbursements if they've got costs of traveling to board meetings or other costs that they incur on behalf of the organization. But the other two categories, you may or may not be restricted from paying in your incorporation legislation. Some incorporation legislation and other acts have restrictions around either budgeting for or earning a profit or having a deficit in a nonprofit organization or a charity. Whether you're required to have your annual financial statements audited by an external accountant, or whether you're required to file an annual report. Virtually all incorporated organizations are. And some have specific record-keeping requirements. So really important to be aware of these if you're the treasurer. I certainly suggest you read your incorporation legislation and your bylaws and constitution to be aware of any rules or regulations in there. Now, CRA filing requirements, and this is just a quick overview of some of the things people should be, the treasurers specifically should be aware of. If you're a registered charity, then you're required to file a T3010 registered charity information return. If you're a not-for-profit organization and you're incorporated, and by the way, the charities, if you're a registered charity, regardless of whether or not you're incorporated, you're required to file the T3010. All registered charities are required to file the T3010, regardless of whether you're incorporated or not. Not-for-profit organizations, if you're an incorporated not-for-profit organization, which means you're incorporated typically under a Societies Act, then you are required to file a corporation income tax return with the CRA. Any incorporated not-for-profit organization is required to file that return. And in fact, it's the return that you make your election in on an annual basis to be treated as a not-for-profit organization. So all organizations are required to file that. Nonprofit organizations that meet certain thresholds are also required to file a T1044, a nonprofit organization information return. This one, it doesn't matter if you're incorporated, if you have assets over $200,000, or I think it's generally investment income over $10,000, or if you've previously been required to file the T1044, then you're required to file it again. Regardless of whether or not you're incorporated. And then finally, I think if your primary activity is dining or recreation, you're also potentially required to file a T3 trust income tax and information return. So possibly three annual returns for not-for-profit organizations. Certainly important for the treasurer to understand the difference between employee and independent contractor. This is probably the most litigated issue that the CRA has across the country, and they don't treat not-for-profit organizations and charities any differently than for-profit organizations, so there's a high threshold for compliance. Same with payroll returns and remittances. Not-for-profit organizations or charities are treated the same way as for-profit organizations, but registered charities specifically do file a different GST return. They file on the net tax method, not the normal method that most for-profit and non-profit organizations file. And actually, some non-profit organizations are eligible for that, the public service body's rebate as well. So really important to make sure you, as a treasurer, that you understand which sales tax returns you should be following, they should be filing, and how they're to be filled out. And then obviously the CRA also has record-keeping requirements, and in fact many organizations lose their charitable status and or nonprofit status because they're not maintaining adequate books and records. Okay, treasurers should be aware of the following. If you're a registered charity, you should be organized exclusively for charitable purposes, you should be operating exclusively for charitable purposes, and no part of the income can be paid or available for the personal benefit of any proprietor or member. There are some prohibited activities, partisan politics, so getting involved in elections, supporting a candidate or a party, unrelated business activities, so business activities unrelated to your charitable purpose. And gifts to other than qualified donees, generally all prohibited. There are exceptions to the gifts to other than qualified donees, but very limited in circumstance. Also, charities have a number of restricted activities that treasurers should be aware of. Public policy dialogue and develop, generally political advocacy. On a nonpartisan basis, there are some restrictions around that. Accumulating property, related business activities, social and fundraising activities, operating through intermediaries, so making payments to nonprofit organizations or individuals. Issuing donation receipts for income tax purposes, and private foundations have some even more specific restrictions. there are a whole bunch of rules around each of these items. I've just highlighted them. Treasurer should understand what those restrictions are and make sure that the organization is in compliance with those rules and regulations. For not-for-profit organizations, you're not allowed to be organized for a profit purpose. You can't be operated with a profit purpose. No part of the income can be paid to or available for the personal benefit of any proprietor or member. And there are some prohibited activities, operating with a profit purpose, issuing donation receipts for income tax purposes. Generally, nonprofit organizations aren't allowed to do that, although there are some specific exceptions. And then generally, they can't receive gifts from charities and foundations. That isn't necessarily a restriction on the NPO, but the charities and foundations are prohibited from making gifts to not-for-profit organizations. And then finally, accumulating surpluses. Generally, the CRA keeps an eye on organizations that are accumulating significant surpluses and may take issue with the organization having significant surpluses or profits over time. So those are some of the things that, excuse me, treasurers and boards need to be aware of with respect to their regulatory environments.
Gordon, can I jump in on that slide? Because we had just a couple of questions I was hoping you could just clarify. First, can you just clarify the definition of a proprietor?
Sure. So generally, a proprietor is taken to be an unincorporated entity, so generally an individual. And so if the individual is involved with the organization, whether they're an employee or a board member, it's basically saying that nobody involved with the organization should be getting any personal benefit, whether it's a charity or a nonprofit organization, from participating in that organization. So if you're going to pay salaries to somebody, they should be fair market value salaries. Nobody should be getting any personal financial benefit by being involved with a not-for-profit organization or charity.
Excellent. And then the other one is just the accumulating surpluses. Could you just expand on that just slightly? Yeah, so the CRA, with respect specifically to nonprofit organizations, the CRA's, the primary restriction for a not-for-profit organization is that they not be organized or operated with a profit purpose. And while the CRA says that you're allowed to earn a profit in a year, generally they say it's supposed to be unintentional. You're not supposed to plan to earn a profit. That would be potentially having a profit purpose. And so they don't like to see organizations with consistent surpluses. Now, they do, and again, this is, I'm going to be talking about this at a high level, and it's important that treasurers go out and find out what the actual rules and regulations are around this in some detail. But generally, the CRA may take issue if an organization is having consistent surpluses, if they're budgeting for surpluses, and if they consistently have surpluses, the CRA could argue that they're operating with a for-profit purpose and should be treated as a for-profit organization. They do have some administrative flexibility, and they generally say, the CRA has an administrative policy that generally says that they will allow organizations to build an operating reserve to protect the organization. If you ask them how much, they'll say, well, whatever's appropriate for the organization. Generally, 3 to 6 months of operating expenses they'll allow, but for some organizations, that may not be the right number. For some organizations, it may be 12 months of operating expenses. For some organizations, it may be 1 or 2 months of operating expenses, depending on how financially stable the revenue sources and expenses are. So there are some specific rules around this. There have been a number of court cases around it. There's been a significant number of interpretations by the CRA. They're hesitant to give advance rulings around accumulating surpluses, but organizations should be aware that if they're planning for profit, or if a part of their business, the other thing you're not allowed to do is have a department or a part of your organization earn a profit to offset losses in another line of business or program of your organization.
people used to think that there was a destination test, that if you used the money that you received as a not-for-profit for nonprofit purposes, you were okay, and that's not necessarily the case, and the same with charities. So you really have to understand the rules and regulations around operating potentially with a profit purpose and accumulating surpluses in order to make sure your organization stays on side of its regulatory environment. Does that sort of help?
Yes, I think that covers it, Gordon. Thank you.
Wonderful. Okay. As I mentioned at the very beginning of the presentation, I think risk reduction is also a significant treasurer role, particularly on the financial management side, but more generally for the organization as a whole. Generally, this is a job that's taken on by the chief financial officer, if the organization has a chief financial officer. If not, it would generally fall to the treasurer. So making sure that there's some attempt to identify risks and then mitigate those risks for the organization, ensuring that the organization has appropriate insurance policies for directors and officers insurance, premises and general liability insurance, and making sure that any programs they have in place where there are volunteers involved are covered by insurance, which generally volunteers may not be covered under many insurance policies. So if you're getting an insurance policy to cover your programs, make sure that you get good advice and that they cover volunteers. And then making sure that the organization has appropriate reserves, financial reserves in place to protect them against fluctuations either in revenue or expenses, unforeseen fluctuations. So another important role under risk management. Making sure that the organization has adequate financial systems in place for financial management and transaction processing, for bookkeeping and accounting, for budgeting and financial reporting, and for financial governance. Here's a slide that basically shows the 4 primary financial systems and the types of questions that treasurers should be asking for each of those systems. So, is the financial information produced by the organization accurate, complete, and timely? Are the financial systems efficient and effective? Are the financial processes well documented? Are there appropriate internal controls in place in each of the systems to protect the assets of the organization? And do the systems provide meaningful information appropriate for the audience? With respect to financial roles and responsibilities, I think it's important for the treasurer to make sure that there are appropriate people in appropriate roles with appropriate skills for their positions. So here again are some questions to ask for each of the primary financial positions in the organization. Who's currently performing each of these roles? Are the roles and responsibilities for that person clearly documented and followed? Do the individuals have the required financial skills and experience in order to competently fulfill those roles? And who is reviewing their work and ensuring that those individuals are fulfilling their roles? With respect to treasurer, so those are the general roles and responsibilities I think that treasurers have, unless they're fulfilled by somebody else in the organization. Now, here's ideal qualifications for sort of all of the primary financial positions. If you're in a larger organization, obviously, if you're in a smaller organization, you may not require people with this level of skills. And I'll let you go through these at your leisure. You will get a copy of the slides after the presentation. We do know that the treasurer should be the most financially sophisticated person in the organization. Where can you go to find a treasurer? CharityVillage has free posting for volunteer positions. Certainly encourage you to start there. The various chartered professional accountant organizations across the country often have career sites, and they'll often post volunteer positions for free. Go Volunteer through Vantage Point has a service that helps match board members with board opportunities. And then obviously board and staff networks and accounting firms and accountants are also good places to go. I know there's a few of for example, the big 4 organizations that are trying to get all of their accountants to take on nonprofit and charitable treasurer roles or board roles to get some good experience and to do some networking, so they can often be a really good source. I'm going to briefly highlight some of the training materials available. This is a primer for directors of nonprofit organizations. Really good piece for the treasurer and all board members, in fact, to review. It's available online. It hasn't been updated for a while, but the information is still great. There's a pamphlet prepared by CPA Canada called A Guide to Financial Statements of Not-for-Profit Organizations. Again, should be required reading for all board members, but certainly treasurers. The Government of Alberta and the Muttart Foundation have put together financial responsibilities of nonprofit boards. It's relatively brief, relatively high level, but a great resource. On our website, we've got a number of different resources: Financial Management Roles and Responsibilities Guide, Basic Internal Controls for Small and Mid-sized Not-for-Profit Organizations and Charities, Treasurer Position Description, Template for Nonprofit Organizations and Charities, and a Treasurer Roles and Responsibilities as well for Not-for-Profit Organizations and Charities. We also offer a Certified Nonprofit Accounting Professional Program. It's 7 weeks, 2 hours a week that goes through all of the various aspects of financial management and governance in non-for-profit organizations and charities. We're currently the only organization in Canada licensed to offer this programming. There's a book prepared by BoardSource in the US that's definitely worth the $29 US, called The Financial Roles and Responsibilities of Nonprofit Boards. Very well written, very comprehensive, an excellent resource. And there's another resource out of the US, an organization called the Wallace Foundation funded CPA firm in the US to create a website called strongnonprofits.org, and there's some amazing materials there, particularly for mid-sized and larger firms. Now, how do we retain awesome treasurers? Well, there's really, and there's just a few slides left, but there are things we can do to retain the awesome treasurers that we find. First of all, don't overwhelm them with too many jobs. And don't give them work that's either too simple for them. If you've got a 20-year CPA, don't get them to do the bookkeeping. Or if you've got somebody without financial expertise, don't get them to do the bookkeeping, or get them some assistance. And certainly organizations can be looking for opportunities to provide assistance to their treasurers, either by giving them volunteer bookkeepers, controllers, or CFOs, organizing a finance or audit committee, or getting the board more engaged in financial governance, and then providing learning opportunities for your treasurers as well is great. Now, how do we avoid treasurer burnout and turnover? Well, the typical challenge is this. We start with a treasurer and say, hey, would you mind being our treasurer? And somebody volunteers and goes, sure, I'll be your treasurer. Well, then somebody from the board goes, oh, by the way, we don't have a CFO. We don't have a chief financial officer. Would you mind terribly taking on those responsibilities as well? Well, okay. Oh, sorry, I forgot to say we also don't have a controller. So we hate to ask, but would you mind taking on those financial roles as well? Yeah, we don't have a bookkeeper either. I'm afraid you're going to have to do the payroll and sales taxes and prepare our financial reports. And by the way, our executive director and CEO really doesn't have a financial background. They're really more program related. So if you could take on their financial roles as well. Oh, and we don't have a finance and audit committee. So if it's okay, if you could take on those roles. And by the way, our board isn't very financially sophisticated. They really, again, are program related. So anyway, this is often what happens in organizations, that the treasurer ends up having to take on all or virtually all of the financial roles in an organization. It can be overwhelming, particularly for people with little or no financial background or training. So it's not unusual for treasurers to burn out and turn over. So final thoughts. Please think about becoming an awesome treasurer, advising the board, reducing financial risk, developing financial literacy of your board members, and bringing in additional help if you need it. And then finally, helping to find and train your successor. Specifically for smaller organizations, and I know we're right at 11 o'clock here, there's just, I think, one more minute. We identified the challenges at the beginning of the session today, and there are some possible solutions specifically for small organizations. Hire a bookkeeper or arrange for a volunteer bookkeeper. Treasurers without significant financial experience and expertise can find a mentor from a similar organization or from an accountant. Build your own financial capacity. Go and read some of those resources we talked about and take advantage of some of those training opportunities. Find a more experienced treasurer when you're doing your succession planning, somebody to take over from you. Find somebody with a CPA with experience in your sector. Or find board members with more financial skills and experience, or engage a part-time controller and CFO. Okay, so that's really our content for today. And just to let you know, I have provided my contact information here, and we do make an offer to anybody attending the session today. If you have revenue over $1 million, we're happy to provide a free 30-minute consultation on any of the topics we've covered today, so feel free to take advantage of that. And with that, Marina, that's the end of my presentation.
That's wonderful, Gordon. Thank you so much. That was jam-packed. I want to just remind everyone who needs to jump off on the hour here that we are recording, and if we go over time with the questions, we will record those as well. So you can feel free to go on with your day if you need to, and you'll get the questions the Q&A that you can check out later. Gordon, you're good to stick around for a little bit here to answer some questions?
Absolutely. Yep.
Great. So let's jump right in. Let's talk segregation of duties. We had a question suggesting that the treasurer is often the chair of the finance committee. Yes. Can the committee then go ahead and review financial statements and the budget? Is this an appropriate segregation of duties?
Well, absolutely. In fact, so generally when we're talking segregation of duties, there were those 4 areas that we talked about: reconciliations, custody, can't remember off the top of my head, but essentially data entry, and for example, collection. So if you're talking about revenue, we generally like to see, from a segregation of duties point of view, a different person depositing the money in the bank from the person recording the deposit in the financial accounting records. We generally like to see a different person reconciling the bank account than the person recording the transactions in the accounting software, and a different person reviewing the financial reports than has done the reconciliations or the bookkeeping or the deposits. So it's typically at a lower level. When we get to the Finance and Audit Committee, typically these are board members that are brought on to a committee. So Finance and Audit Committees are generally formed to help the treasurer out fulfilling some of the treasurer's roles. So basically basically the whole reason for a Finance and Audit Committee is to, and I've got more detailed information on this, but I wasn't able to fit it into the presentation. There are specific roles of Finance and Audit Committees, but primarily they're formed to help the treasurer fulfill their duties. So an audit committee would be formed to help the treasurer work with the auditor, make sure that the audit is performed on a timely basis, make sure that any issues that arise as a result of the audit are dealt with appropriately. They're also generally, the audit committee is generally responsible for reviewing any external reporting that goes out for the T3010, whereas the Finance Committee, if you have one, tends to be focused on internal things like budgeting, things like reviewing monthly financial results, internal audit, making sure that the financial systems and the people in financial roles have appropriate skills and abilities to do those roles. Those tend to be the responsibilities of the Finance and Audit Committee. So they tend to be helping the treasurer fulfill the treasurer's role. It doesn't tend to be a segregation of duties issue. The segregation of duties tends to be around making sure that somebody is reviewing certainly the financial reports of the organization, and hopefully that person or people are different from the people reconciling the transactions, inputting the transactions in the financial report, or actually transacting the financial transactions. Does that sort of answer your question?
Yes, I believe it does. And sort of on that same topic area, just to confirm, a treasurer should always be an individual board member who is a volunteer, correct, and never an employee?
Yes, absolutely. The treasurer really is a board position. First of all, there's generally restrictions in the either the Incorporation Legislation that specify that treasurers are required to be directors, and generally also in an organization's constitution and bylaws that directors are generally required to be, that treasurers are generally required to be directors. So in virtually all instances that I've seen across the country, treasurers are directors. Some of them are paid. There are some charities and not-for-profit organizations that do pay their directors for a variety of reasons. Those are relatively few and far between. The vast majority of organizations, treasurer roles, well, first of all director roles generally in the sector, as well as officer roles like chair, vice chair, treasurer, and secretary are generally unpaid roles. If you have paid roles or staff roles, they're generally either a bookkeeper role, a controller role, a CFO role, or the CEO also has some financial responsibilities.
Perfect. Now I want to go back to your slide about prohibited activities for charities. We've had a lot of questions come in about the fact that you had issuing tax receipts for income tax purposes underneath the restricted activity for charities. And I think I know what you mean there. I think you're referring to issuing receipts that are actually for the benefit of the personal income tax credits. Is that correct? Yeah.
Absolutely. So my point was just to say that there is a significant, there are significant rules and regulations around issuing donation receipts. So all registered charities have the ability to issue donation receipts for personal income tax purposes for gifts made primarily by individuals. But there are a significant number of rules around issuing those donation receipts, and organizations can potentially lose their charitable status if they don't follow the rules. And the CRA takes issuing donation receipts very, it's a very important issue for them. They review organizations' receipts on a regular basis, and if organizations are not following the rules, again, they can potentially lose their registered charity status.
Perfect. And I've just popped a link in the chat box as well for those that want to catch up on charitable receipting do's and don'ts. We had charity lawyer Mark Bloomberg present on that topic last year, so you may want to go and check out the recording to that as well. Okay, let's carry on. Getting outside help from an outside consultancy, can that help to improve the board's supervision in these areas, and does it discharge their oversight duties?
So two separate questions. The first question is, can it help? Absolutely. And Marina, this is something we do for a significant number of organizations across the country. We provide support both to the board to help train the board and educate the board. We often work with treasurers, helping train the treasurers to understand what the roles and responsibilities are and how they can discharge those responsibilities. Ultimately, the board and the treasurer and the finance committee and audit committee are still ultimately responsible. The individual board members, that's where the buck stops. So if you've got 10 board members, they're ultimately responsible and the buck stops with them. But some of the things they can do to show that they're discharging their financial roles and responsibilities are to make sure that they have the right people in place, whether that's employees, whether it's volunteers, or whether it's independent contractors, outsourced finance departments or independent consultants. They can discharge their responsibilities a whole bunch of different ways by getting a different support in different ways, but ultimately it's the responsibility of the board member. So can they discharge the responsibility? Can they delegate the responsibility? No. Can they discharge the responsibility by bringing in appropriate help and support? Absolutely. It's one of the ways that they can discharge their responsibilities is to make sure that they have the appropriate people in appropriate roles, fulfilling all of the financial roles that are required to be fulfilled by the directors.
Great. And I'm so glad that you touched on retention at the end of your presentation, because we did have a few folks who I so appreciate your honesty. wrote in the chat bar saying, you know, we hire treasurers and then they quit. So how can we improve that? So I think you covered some great points there to help with that. I want to just finish off today by touching on what you talked about with recruitment, and I think you offered some really great suggestions there. We have put a link in the chat box about setting up a volunteer posting on CharityVillage. That is entirely free to do that. You just have to set up a free account. And there is an option when you do that to actually provide consent for us to cross-post that volunteer listing on LinkedIn as well as a skilled volunteer position. So that's great. And for those of you that are in Ontario, we have a partnership with CPA Ontario as well, where their members are able to access specifically the treasurer and finance volunteer positions in Ontario nonprofit organizations. So definitely want to get your positions up on our volunteer board, because there's some different opportunities there for you as well. Gordon, I want to thank you. This has been an absolutely fantastic presentation, as it always is when you're here. Thank you.
Thank you for that.
Do you have any final thoughts for us?
No, I think, you know, the treasurer position really is an important role, and for many organizations that don't pay enough attention to it, they end up bearing a lot of financial risk. And a treasurer can be the one person who can help the organization identify areas of risk and make sure that the organization sets it up well to manage that risk and reduce that risk. So I'm just thankful to all the people out there that take on the treasurer role. It can be a big responsibility, and thank you for taking it on and doing your best to help the organizations you're involved with.
That's awesome. Well, thank you so much, Gordon. We do appreciate you so much for coming back and doing another session for us. For all of those that are asking about the slide deck and the recording, yes, you will get all of that by email, probably later today, at latest by tomorrow morning. So just watch for that. There will be a short survey. It takes less than 5 minutes to fill out, and we hope that you'll complete that for us if you can. And you can let us know there as well if there's other topics you'd like to see covered in a future webinar. I also just want to quickly announce that CharityVillage, we're very honored to have been nominated as Favorite Job Board in the 2019 Canadian HR Reporter Awards. So we'll include a link in the email we send tomorrow as well, in case you'd like to vote for us and your other favorite HR providers in that survey. And we hope you'll come back and join us next week, March 21st, for the final webinar in our free executive series. We're going to be having Monica Merrifield discussing risk management, which will tie in a little bit to what Gordon talked about today. So thank you for joining us today for this important presentation. I hope that we will see you again next week. Bye-bye.